Okay, guys, good morning. Looking forward to the week. Let's have a little review of last week and then look ahead, see what we've got on the agenda and how we expect these different markets to pan out. So usual screenshot here with equities on the top half, looking at the S&P on the left and the DAX on the right. Bottom half of the screenshot, we've got the euro dollar, we've got the bund, we've got crude oil, and noticeably crude oil, perhaps the market making the most interesting movement this morning, because we've again tracked lower, and this is the January contract, breaking last week's low already and shifting down, and almost certainly and inevitably we're going to get a test of the low of the year, which for this, I should say, the test of the low of the year for the January contract, which is right on the $40 handle. You can see it's 39.97. This was the August low. Now we do have, if I just showed you on the continuation chart, we talked about this last week, but just to make it clear, the official low of the year is actually 37.75. That was the front month contract low back in August. So we've kind of got a double, two major supports on the downside still to go for oil. $40 or 39.97 is that low that we had for the January contract in August, and then we've got the continuation chart low at 37.75. So crude oil under pressure this morning, and that's kind of helping with the vibe, which is a negative one for equities overall. We have stocks on the back foot. You got Euro stocks now testing Friday's low, down 0.8% on the day. It's been pretty much a one-way street since the European Open. You can see on my DAX chart, we're back to now test the 6th of November high. So we broke that last week. And, it was a pretty impressive week for equities. Look at this DAX chart. 4 blue candles. We had the Thursday where we had a doji, but officially it was an up day. So 5 up days straight for the equity space. Actually, for the S&P, it was the best week of the whole year. If I just show you on a weekly chart for the S&P, then and let's just have a look at this, because this is quite important. Looking at the longer term, look at that week bar. I mean, it was pretty phenomenal. Opening the week at 2,000 and then just pretty much a straight line to the upside, erasing all of the weeks before, what was heavy downside the week before that. So we're back up at the top of this little wave, and I've got this downward trend line here, just to not particularly accurately drawn actually, but gives you the general idea that we may well be in a downtrend now, having trended higher for several years. We do have the scenario of potentially this being a lower high. It's only potentially, because we're right back up at 2100 almost. And so what we thought was the top being put in place for this wave and that big sell-off a couple of weeks back may well not be. If we are to break 2100 this week, let's say, and take out that high that we had for November, which is at 2110, then we still have a chance of taking out the high of the year before Christmas, taking out the all-time high at 2134, in which case, this sort of multi-year uptrend still has legs, it would seem. But so that's why I think this week's really important. And we started it off on the back foot. Energy prices lower is helping to put things under pressure. And so let's kind of take stock. I'm just looking some other technical things, because we have had some data already this morning, and what you've got is the bund on the lows, and that low is the low point we had, I should say it's the October the 2nd high, and we've been flirting with this trend line that was very significant for several months, and then we broke below it, and it did set up a nice extended breakout lower at the start of November. But of course, since then we've launched back higher, and we ground back up through the trend line last week, and it looks like we are back below it now. So this trend line perhaps losing significance as we've chopped through it a number of times last week, but that 2nd of October high is certainly still important. This is on a continuation chart, so 157.67. This was the low of the day on Thursday last week once we got up above that price point. So you've got bonds lower, you've got equities lower in Europe this morning. And then when we look at the euro dollar, what you have is initially downside, and we broke last week's low. But if I go to a 1 hour chart, then we've pushed back higher, since the European session has got underway. So it does look a little bit like a sort of reverse QE trade here. Equities and bonds under pressure with the euro pushing higher. Now, why might that be? Because we have had some data this morning already. Let's have a look at the data calendar actually, just for today, and then we'll look at the week ahead also in a minute. But we've had lots of manufacturing and services sector data. So these are the preliminary PMIs for the month of November. We'll get the final readings for November, actually next week. So this is a bit of an update, sort of 3/4 of the way through the month. And so we've just had German figures at 8:30. And if I just flick to the charts here, they've actually come in better than expected. So for Germany, if you're looking at let's say the manufacturing numbers, so 52.1 was the reading for October. And what we've seen, if I just show you the chart here, we've seen that tick higher, and it's coming at 52.6. So a better than expected reading. It's actually the 3rd best month of the year. Obviously, we've got this August bar that stands out still as the best month, 53.3. But look, better than expected manufacturing numbers from Germany. Also better than expected services sector numbers. And this is more significant because we've just printed the highest point of the year. So moving up above that March reading, 55.6. If I just show you on a slightly longer time frame, then it's the highest number of 2015. We did edge above 56 once, briefly, mid-2014. But really, you can see that 56, or just shy of it, has been a key barrier. Really, apart from that 1 month in 2014, we haven't been above 56 for German services PMIs since 2011. Okay, so we are right up towards the top end of the range. These numbers are beating expectation. And here we are kind of a week and a half away from the ECB monetary policy meeting. And, there's still an element of uncertainty as to what they're going to do at that meeting. How aggressively are they going to extend stimulus? I think we're fairly certain they're going to cut interest rates and certainly the deposit rate. But are they going to choose to also deliver a double whammy of extending the QE program or not? And, I'd say it's this kind of data this morning from Germany that might just marginally reduce the chances of the ECB being more aggressive than markets think. So to put it another way, perhaps reducing the chances of a QE extension. I mean, this is all minor, marginal kind of stuff, but this might explain the kind of behavior we've got in the marketplace this morning with what seems to be a QE off trade, with equities lower, bonds lower, and the euro appreciating in value. So that's the kind of shape of the data that we've had to get things going. But look, if we have a look at the data calendar, just to see what else, we've got the European PMI numbers at 9 o'clock, so just in about 9 minutes time. And then we're into the afternoon, and nothing major until we get to 2:45 when we get the manufacturing PMI preliminary number for the US. We're expecting pretty much the same as October, expecting 54. And then we've got the existing home sales data at 3 o'clock. We're expecting a drop, pull back from last month's very strong numbers. On the monetary policy front, we got Constancio from the ECB. We got Weidmann again at 11. He spoke last week. Draghi and Weidmann both speaking towards the end of last week. Draghi trying to be dovish, Weidmann being the opposite, as you'd expect. Draghi said, if we decide that the current trajectory of our policy is not sufficient to achieve our objective, we will do what we must to raise inflation as quickly as possible. He said, this is what our price stability mandate requires of us. So that was Draghi, and then Weidmann countered with, I see no reason to talk down the economic outlook and paint a gloomy picture. We should also not forget that the monetary policy measures already taken still need time to fully feed into the economy. So, you'd expect that kind of comment from Weidmann. I didn't think Draghi was quite as dovish as he had been in previous comments. That was my kind of personal view, but we'll see. Plenty more speak as we go through the week, and it's mostly ECB. Well, it's only ECB guys today. In fact, there's no Fed speak, and actually there's very little from the Fed all week. So yeah, interesting data this afternoon, particularly the 3 o'clock housing numbers, and then just keep your eye out for Constancio and Weidmann this morning, and then the Eurozone PMI numbers at 9 o'clock. So I'll cover those in a sec. But let's have a look at, I just want to have a look at the week. So let's have a look at the week ahead. I'm going to bring in because obviously the week's going to be disrupted by Thanksgiving. This is on Thursday. So I just want to show you that from a data point of view, tomorrow is going to be all about stuff like German GDP, German IFO, so really important German data. We then get a very interesting second preliminary reading for quarter 3 GDP from the US, where the market expectation is for it to be revised higher. We got a 1.5% reading on this a month ago, and we're expecting it to be revised up. We'll talk a lot about this tomorrow. This revision higher isn't necessarily good news, because what's happened is we've seen a real pretty sizable build in inventories, which basically has, I guess, front loads GDP growth into quarter 3 at the expense of quarter 4. So we'll see, but this is expected to be revised up from 1.5% to 2%. So that's the main data on, got a consumer confidence figure as well from the US. Wednesday then, this is an unusual day because we've got a phenomenal amount of data packed in here from the US because there's nothing on Thursday or Friday. They've basically taken 3 days worth of data and squeezed it into one. So we will have a busy afternoon. Durable goods, personal spending, personal income, services PMIs, new home sales, University of Michigan consumer sentiment, crude oil inventories. It's all packed in here. So this will be the busiest day of the week from a data point of view. Thursday will be by and large a write-off. We will be trading the morning. We'll be doing a half day. So Thursday afternoon we are off. US markets shut. Friday will be a quiet day from a volume point of view. It will be a full session, and it'll be thinking about, just how strong is the retail space in the US as we get Black Friday, the biggest retail day of the whole year in the US. We'll get Cyber Monday next week. That's the biggest online retail day of the year. So lots of focus on the retail front. And this has been a pretty weak patch of the US economy in 2015. Retail sales have, by and large, consistently disappointed through the year. So a lot of focus on that. But yeah, just be aware, of course, that Thanksgiving is getting in the way a little bit this week. So let's just get back to the charts here. Let me just focus. I want to just talk a little bit about the euro dollar on a daily chart, and actually forget daily. Let's have a look on a weekly chart, because to kind of give you a sense of where we're heading here. It's been pretty consistent on the downside, of course, for the last month. Okay, we hit the 115 handle mid-October. We've had plenty of dovish ECB chat, and we've had plenty of hawkish Fed chat, and we've had some very strong US labor market data. And so it's fetched us up down here, trading in the 106 space. And obviously the key target for this downward leg is the low of the year, set back earlier on in March, 104.74 on the continuation chart. So, as it stands, we move towards December, where we will get the ECB conference next week. We'll get the Fed the week after that. And, ultimately their actions will determine whether or not we're going to get a break of the low of the year. I think it's probably the case that I don't know. I'd say that it's unlikely we get a new low for the year before the ECB next week. And then, of course, it's dependent on if the ECB do more than what we expect. You're going to need to see the ECB cut rates and extend QE to get euro dollar down through that low of the year. I think the closer we get to that December ECB meeting, I think the less chance of QE extension. And actually, the ECB's actions will have an effect on what the Fed do. If the ECB cut rates and extend QE aggressively, can the Fed hike into that uber dovishness? And because if they do, well, then you've got to be looking at parity for the euro dollar, and that carries some pretty significant negatives for corporate America. So very interesting few weeks ahead, and we start today having had some better than expected German data, and it's almost like good news is bad news here with QE extension expectations, but it's nothing dramatic. We're about to get the Eurozone PMI numbers. It's all small stuff. The DAX has tested that November the 6th high, and that's fine. It's held for now. We're in a pretty tight range here. Look at the S&P on the weekly chart. We're right at the top of what was the best week for 12 months. Okay, so the 2100 handle is very important. It's the downward trend line for the last 6 months, if you like. It's also the 2110 is that key top from November the 2nd. So keep your eye out for that technical level. The Bund has found support at the 2nd of October high, and oil is on a downward trajectory. So I'm going to get off the mic now because we're about to get the Eurozone PMI numbers. Enjoy the session.